A big time saying over the summer was that bad news is good news for stocks. And in a typical environment, that's not the case. But in the environment of the last year, since the pandemic has begun, that has been the case. As we have gotten more bad news, it has actually led to good news for the stock market, and that has continued to let the market rally. And then in addition to bad news is good news, there was a saying, good news is good news. It's essentially a can't lose market. So we are recently seeing COVID cases pick up, and COVID is still a big part of our macro equation and our way of looking at the market. We certainly have to consider it, and we have to consider it because not only does it affect lockdowns, consumer spending, and all of these kinds of things, but it affects fiscal policy. And fiscal with monetary, both of them, policy, have brought us to this point. So you've heard this talk about immediately another infrastructure spending, big time spending bill, coupled with it's not all going to be infrastructure, it's going to be some other stuff too. You've heard this coincide with a slight difference in COVID cases. And now all of a sudden Democrats are saying, more stimulus checks, probably not going to happen. Regardless, once the cases began to turn at the end of last week, we saw the Biden administration start pushing this stimulus package. It was always kind of there. But now they're having a meeting in Pittsburgh. That was announced a couple days ago. Psaki gave us some details over the weekend that it was going to have a lot to do with healthcare and these kinds of things. They're ready to spend. And bad news is good news. They're going to probably get it done if they want to get it done. They have the upper hand, as was said today by Mike Pence's former chief of staff. And it's going to probably happen. If there is some sort of uptick in COVID cases, which it's looking like there's a little something going on there, they'll probably get more stimulus. This will be, in the long run, good for stocks. Stocks are a good hedge against inflation. And, bad news is good news. That's what it is. But it's not all bad news out there. There is some good news, particularly in consumer confidence. The consumer confidence number of this morning, I believe it was expected to be somewhere in the 90s, coming in at 109, being the highest number since March of 2020. That's some pretty good stuff right there. That's what we like to see. And as an Uber driver, I've been getting paid like crazy recently with all this stimulus money. People are ready to get out there. This is a good sign for what to expect once the lockdowns are lifted. So that is the most important thing, if you ask me, for the economy. Are people ready to spend? And it seems like there's some sort of pent-up demand out there. There's confidence to spend. And all we need to do now is, suppress the virus. It's not good to see an uptick. It's not crazy yet. Hopefully it won't be. We just got to get vaccinated, take care of business there, and then really start unlocking the economy and unlocking the country and get people back out there living life. I expect people to begin living life as soon as they can, that being good for the market and good for areas of the market that are super well priced, like energy. Energy is very well priced. It's highly correlated with inflation. Energy has seen some inflation, and I expect it to continue once the economy is reopened. People are driving more, doing things, flying more, possibly cruises coming back online. There's some stuff going down in Florida with that. So hopefully it'll happen. And, I've seen some good things. There is the bad rise in cases, but that will lead to more good things for stocks and will lead to more inflation. And I suggest you watch yesterday's video, get a little more details on that inflation stuff so you can visualize that. And until next time, peace out.